Hi everyone, I'm Victor from my Bank Alert channel. Today we are going to be looking at chart patterns, just like I said in the previous video on the introduction to technical analysis. Recall that I explained to you that technical analysis involves the study and evaluation of historical market data for analytical and forecasting purposes. So today we are going to be looking at the application, how we are going to apply the evaluation of those historical data, the information we have gotten, how do we now use it in trading? So we use it in trading by using chart patterns. So chart pattern is a way for us to now apply those study and evaluation of the history of market data into real life trading that will help us to be profitable traders. Remember, when we are using chart pattern, we are not using it in short-term basis. We are only focusing on long-term, on long time frame. We are not looking at the lower time frames. We are looking at the higher time frames from H1 and above, H1, H4, monthly, weekly time frame. We don't want to be trading on 1 minute, 5 minutes, 15 minutes time frame. No, 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 no. If you do that, you are going to lose money. I've done that several times and I ended up losing money. So you will make money, but you are not going to make money consistently. You are going to lose money most of the time. Why are you going to lose money most of the time? The reason is this: the probability of these patterns working out in lower time frames is very low, unlike in higher time frames. In higher time frames, the probability of these uh, chart patterns working out is higher. So that is why we avoid the lower time frames when we talk of chart patterns. Now, chart patterns are just pictorial or graphical representation of those history that we studied in the past. So when we study this history, when we study this chart pattern, we will observe that there are patterns that repeat. So when you observe that a pattern repeats itself, it will help you to be prepared in the future. So that if you are trading and you see a particular pattern, you will just be ready to take advantage of that pattern make to predict where price is going to. Now, the average trader will tell you that price is random, that market is random. Yes, market is random when you are just starting. When you are just starting to trade, you will find out that you will see that market is going up. When you buy, immediately you buy, it will just go up small. You make small profit and be happy. The next thing is that it will now go down. Wow. When you want to now sell that in anticipation that the market will continue falling, it will just go up. Boom, and you just be surprised that you will be feeling like somebody is after me. Somebody is after me. Nobody is after you. Just that you have not learned the chart patterns that that will work out in the long term to make you profitable. So the essence of this video is just to introduce you to various chart patterns for you to know the importance of studying chart patterns in trading. Remember, our goal is to become unconscious, consistent, profitable, professional traders that will be receiving bank alerts steady. So if you are here to subscribe to this channel, please kindly do this and also give us a thumb up, like us, and click on the notification button to enable you get more videos when we make one. So let's continue. If you have subscribed, no problem. If you have subscribed, thanks. Let's continue. The chart patterns are graphical representation of historical price movements in the market. So this pattern will help you to predict where the market is going to. Like in the intro video on technical analysis, I show I when we were analyzing CAD JPY, I showed you how I forecasted that the market will be in downtrend in 2024 and possibly 2025. That is the power of studying chart pattern, because the chart pattern there is more like a M pattern, and in M pattern, the when the last leg of the M is about to form, you know that the market is going to be bearish in most of the cases, 90% of the cases. So in anticipation of that, I now said, okay, since the pattern is almost coming to a conclusion, that this year we are going to be looking at shorting. Let me see if we are going to see that pattern CADJPY. So you see, I'm using the monthly chart pattern. You see here how I made the prediction. If you see here, you will see a pattern. This pattern is something that is common. This is almost a butterfly pattern, or you can say it's M pattern. You see the M, first leg, then it makes an M. This is a pattern that is common in Forex. So I'm now predicting the market will move from here to here. Or I can predict it can first of all come here. Then depending on what is happening, it may break this area to come this area. Anything can happen in here. These things is the studying the chart pattern will help to increase your probability of success. However, the market can just continue to go up. So nothing is 100%, but studying these patterns increases your chances of becoming successful. So we have many chart patterns, but we are going to be studying the common ones. And the way we are going to study it is that we are going to be doing it one time. In the course of our analysis, we are going to be looking for these patterns. So when we find a pattern, we will now use that pattern to put a trade. So or this lecture is just introduction to chart patterns. It's a kind of overview of chart patterns. So let us look at various common chart patterns we have. I can't remember the one I removed. So there are many chart patterns. We have the head and shoulder chart pattern, where you have the head, then you have the shoulder in between. You just visualize yourself. You see yourself as head. You see the right shoulder. You have the right shoulder. You have the left shoulder. Now, when price moves from the left shoulder, just have a visual mentality, assuming this is, let's look for head and shoulder pattern. Okay, let's see. Assuming this is a shoulder, this is now a head, then this is the neck. Then you now come here, you find out that price will visit this place. So this is what we call head and shoulder pattern. Then we have double top. Double top pattern is when, assuming with this extreme formation of price here, when price approaches here again, this region again, it becomes a double top. You call it a double top. As you are doing it, you will be observing the behavior of price at that region. That will help you to increase your chances of success. We have the triangles, ascending, descending, symmetrical triangle. When price consolidates, it creates a pattern with converging trend lines. So ascending triangle indicate bullish continuation, while descending triangles suggest a bearish uh, continuation pattern. And symmetrical triangles implies indecision before a potential breakout. So you just look for These things are just random. Okay, let's see if we have a triangle here. We have this is descending triangle. You see how price broke out from this descending triangle and continued to move downward. Then we have the flag patterns, pennant patterns, the cup and handle, wedges. We have rising wedge. We have the round bottom, inverse head and shoulder, rectangles, trend lines, or uptrend and low trend. All these things are patterns that you will see that will happen in the market constantly. So our duty is to look for these chart patterns. That is our business as traders. Once you're able to identify this chart pattern, use proper risk management, control your emotion, you will become successful. There is no two ways about it. You must become successful. There is no two ways about it. Now, what are the importance of chart patterns, studying chart patterns? Let us look at the importance. Number one is that it helps you to identify the trend. Now, if you look here, you see that this chart pattern now we identify is telling us that the trend is downwards. You understand? So if you don't draw this chart pattern, if you're unable to find this chart pattern, we don't know what will happen, whether the pattern, whether the trend is up or down. But your ability to identify these chart patterns will help you to say, okay, this is uptrend, this is downtrend. So it helps you to predict price movement. If you don't study chart pattern, it will be difficult for you to predict price movement. Like in CADJPY, I was able to say make prediction. Now price have not the price is still up, but I'm predicting that the price will come down based on my previous experience, based on my previous study of this pattern in the market. So it also helps you to confirm sentiments. Most times the market will have a sentiment, maybe it's a bullish or bearish sentiment. And if this sentiment is in tandem with what you have in your chart pattern, you trade with a high degree of accuracy. Then risk management. If you have every chart pattern have the its own risk reward, and this will help you in risk management. You know how much you are risking, how much you are going to stake for each trade. For instance, if this trade, if I'm taking this trade, if I'm risking, I can just say, okay, let me risk. I'm anticipating that price will come here, so I will risk maybe uh my risk reward will be say 1 to 3. So you see, I can just say, let me put my stop loss here. I'm anticipating the price will come this side. So I'm risking maybe 0.5%, and I will be making 3 times that 0.5% I'm risking. So it tells you in risk management. Why? Because it provides you with entry and exit. So if I don't have this chart pattern now, it will be difficult to say I will enter here, I will exit here. But with this chart pattern, I know that there is the chance of this price coming to this area is there. The chance of this price coming to this area is there. So it helps me to now say, okay, I will enter here, I will leave here, I will exit here. So it helps in providing you with entry and exit. Then it serves as a confirmation tool. We have said that for your trading analysis. So it's a visual representation of the market dynamics. So without chart pattern, the market will be random. You will just be looking at the market chart, you will be confused. And if you go to the lower time frame, it will be worse there. If you go to the lower time frame, it will be more random. You will not know. If you look here, is it up, is it downward or upward trend? You can't say. But if you come to lower, higher time frame, you can easily see this made a uptrend in this period. This made downtrend. This made uptrend. Now we are anticipating a downtrend. We'll be looking for price to start falling. So as a way of conclusion, chart patterns play a significant role in technical analysis and is a valuable tool for traders to understand market behavior, price, predict price movements, and manage risk effectively. So thank you. If you have any question, feel free to ask your question in the comment section below. Also, feel free to subscribe and share this video with your friends and loved ones as we work assiduously toward becoming unconscious, competent, professional, profitable traders that will receive steady bank alerts from trading. Thank you.